Good morning, everybody, and happy Thursday. I woke up this morning thinking today was Friday, so I'm a little disappointed, but nonetheless. 189,910 people recovered from COVID-19 yesterday, according to the COVID Tracking Project. Locally in New Jersey, where I live, Hackensack University Medical Center released its 5,000th COVID-19 patient yesterday, which is pretty remarkable. We did about 215,000 tests, with the positivity rate yesterday creeping back up to about 10%. Not great, but we'd like it to see it stay lower, but we're still at about 10%. The pharmaceutical company Moderna announced today during their earnings call that the FDA has approved their COVID-19 vaccine to move to phase 2, which is ahead of its stated schedule. The opening of the U.S. economy continues in states that have or will be lifting their stay-at-home directives in the next few weeks. So Simon Property Group has announced it'll be opening about 50 of its malls across those various states. This will be a really good indication of consumer behavior, as well as, how much foot traffic are these malls actually going to get in the weeks after opening. Yesterday overall was a pretty boring day in the markets until about 3:30 in the afternoon, when a sell-off intensified into the close, helping the Dow close down about 218 points, just under 1%, with the S&P 500 down about 0.75%, 0.70% or so. The Nasdaq did end the day higher due to large cap and mega cap technology companies continuing its outperformance. We're going to continue to be told by anyone who can get on TV or a talking head on CNBC about the market recovering and how we're only down now a little over 11% on the S&P 500. But they'll never explain to you how performance of various indexes is actually calculated. The S&P 500 is a market cap weighted index. Simply put, the larger the company, the more influence it's going to have on the daily move of the index. So if you take FANG plus Microsoft, Facebook, Apple, Amazon, Netflix, Google, and Microsoft, they make up about 20-25% of the S&P 500 and has been the real driver of this recovery. If you look at the S&P 500 from an equal weight standpoint, where each company holds the same weighting, the index is down more than 20% still, and that's determined by the S&P 500 equal weight ETF that's created by Invesco. So the markets are recovering, right? This is good news, and there's more good news on the horizon. There is light at the end of the tunnel, but we're remaining cautious in the portfolios, and we continue to look for opportunities and ways to reduce risk while maintaining exposure in the broader markets. This morning, we got new unemployment claims, which came in at 3.169 million people, which is another breathtaking number, but not unexpected. Difficult and frankly, downright bad economic numbers are going to continue to roll out, as I've written and spoken about in my earlier commentary. But diving into those numbers is the key to really understanding them, and we use that information to formulate and mold our investment thesis. So last week, we learned that GDP dropped on an annualized basis by 4.8%. And if you listen to, like I said, talking heads on TV that day, you would have thought that demand in the United States was gone and was never coming back. When you dove into the number, though, we realized that almost half of that GDP loss was due to a decrease in spending on healthcare. And reason being, most hospitals across the country suspended elective procedures and other procedures that could be delayed due to the coronavirus. So when you learn that, you realize that if you need a knee replacement, COVID-19 doesn't eliminate that need for a knee replacement. It just pushes that demand off. So, demand becomes pent-up demand when it comes to healthcare, which is a good sign, as we see hospitals now beginning to allow select elective procedures. On a lighter note, we have the beginning of sports to some extent starting this weekend, with the UFC holding its first fight card since February. Although many are not fans of the Ultimate Fighting Championship, I happen to be, because I do jiu-jitsu and I'm a martial arts fan, I guess. Sports in general is starting to make its way back, albeit slowly. Even without fans, that's a huge boon for television and media sectors. we forget how much of a role sports plays to television and media companies like Disney, who own ESPN. More importantly, we forget how big of a role sports plays in daily lives. It has a way of bringing people together. It lets people sit down and watch something and sort of forget about the stresses of overall life. Although if you ask my wife, she'll tell you that I might get more stressed during sports as I tend to yell at the television. But I swear that the coaches can hear me. We have a system. They know what I'm saying. At least that's what I tell my wife and children. Have a wonderful Thursday, everybody. I will see you all tomorrow, and I look forward to seeing you all on Zoom or in person, hopefully very soon. I miss you all quite a bit, so have a great day. Talk to you soon.